Hi everyone, George here. So would it be ridiculous for you to learn how to increase your credit score over 100 points in 30 days? If the answer is no, that wouldn't be crazy, George. Then stay tuned because I will teach you exactly how to do that. Welcome back, everyone. Let's get to it. So is it possible to increase your credit score over 100 points in 30 days? The answer is absolutely, it's possible. Now there's a second part to that answer, which is very important. And that is that if you already have a great credit, let's say 740 plus, then it becomes a little harder for you to actually get 100 points because there are a lot of different things that are already working in your favor. And it's just a little harder for you to get there, but you can definitely still increase your credit score. And we'll talk about these three categories that you have to focus on in order to make this happen. Now, this is something very important that what I'm about to share with you. When it comes to credit scores, I did another video, which I'm gonna add to the end of this video for you to learn about credit scores. It's incredibly important. You don't only have one credit score. And so this idea of you only having one credit score is not correct. You have over 100 scores, and in that video, you're going to learn exactly how that works. And specifically, I talk about the mortgage scores, which are the ones that you typically have to pay attention to when you're buying a house. Now, when I say that you can increase your credit score over 100 points, typically most of these scores you can do so. You will see an increase of more points in one category, sometimes more than the other. Let's say for mortgage scores, you will see a higher increase depending on what I'm going to teach you today. And if you do it, compared to, let's say, an auto loan scores. And again, check that video out because it's very important. So let's talk about these three categories that you have to learn very well in order to increase your credit scores. The first is this. Most people do not realize this, that a high utilization on your credit cards will crush your credit score, no matter which score. Yes, a high utilization. Now, the question is, what's considered a high utilization? So the way I want you to think about this is the following. The system is designed for the banks. The system is truly designed to protect the banks. So when I mean the system, I'm talking about the scoring models, the models that are used out there to generate your score, specifically the FICO model. This is specifically designed for the banking industry. And Experian, TransUnion, and Equifax use these models, these scores, to generate a specific one for your profile based on the information they have on you, such as payment history and other related information. Now, one of the things that they're going to look at is how much balance are you carrying on each credit card and then across all of the cards together. And the more you carry compared to the limit of that card, the riskier you are. Let's use a very basic example. If you have a $1,000 credit limit on a card and you're using 50%, so $500, and it reports to the credit bureaus because you didn't pay the bill in full, it's going to report that you have a 50% utilization. To the banks, that's risky. Why is that? For multiple reasons. Well, one, as crazy as it sounds, God forbid something happens to you, they can stay holding that bill, and sometimes they just have to eat it. They have to ultimately charge that off. Two, it shows that you have a need for carrying this balance and you possibly don't have the money to pay them in full. And there's a lot of different other things that they take into consideration, but in their minds, it's risky. And so what you want to do with this is you want to keep a very low utilization. Typically, you want to stay below 7%. That's the key number. High achievers, high FICO achievers, people who have the highest scores typically stay below 7%. Yes, you can use the card, but before the statement closes, you want to get that paid down because the credit cards will use the statement closing balance to report to the credit bureaus. So you want to get any one of these cards that you have under 7%. Preferably if you can pay them off, it's even better. Just keep a very small balance on one, 2% is okay, and you will see your credit score jump. I've seen scores jump 60, 80, kid you not, up to 100 points or more just by this one fact. Okay, so that's on credit cards. Very simple. I want you to just pay those things down below 7%. Don't follow that 30% rule that the banking industry is going to give you. That's good for them because they get to charge a little more interest. You want to get out of that. Stay below the 7%. You will get some of the highest scores out there. All right. What's the second one? Derogatory information. This is information that is negative on your credit. Here's the key, guys. Anything that is reported within 2 years have the highest impact on your credit. So let's just say you have a new collection account that was reported on your credit, and that collection account is within 2 years. That collection account is actually weighing more on your scores than one that was reported 5 years ago. And so what you want to do is you want to work on removing the one that is within 2 years first compared to the one that's 5 years. Ultimately, you want to get rid of all of them. However, you want to prioritize these. And there's multiple ways to get these things removed. I'll be doing a separate video on how to remove collections account. However, if you really owe this thing and the thing is just a brand new account within 2 years, there's multiple different ways to do that. You can certainly negotiate it out and do what's called pay for deletion. So you pay and that comes off. You can also dispute it if the information is completely wrong, but you want to do so with specific strategies to try to get it removed quickly. And then ultimately you can deal with them if you're going to settle or not, or whatever you're going to do with them based on the information that they were reported. So the key is, though, that you want to remove anything within 2 years first. That's very important because it's going to actually trigger that score to grow faster. If it's not a collection account, and let's say you have a charge-off, charge-offs are also a big deal. If let's say you have a Capital One charge-off or some other company charge-off, right? You want to look at the ones that are within 2 years, and then you want to first fix those. If it's something that you did not pay, then you want to come to an agreement and settle on these accounts. And no, a settlement does not hurt you. Don't let any creditor tell you or collector that a settlement is going to hurt you. We're going to report on the comment section that you settled. Who cares? It does not hurt your score. What hurts your score is that this account is reported unpaid, is reported derogatory. It's not reported as paid. And so what we normally do is if you really owe this money out there, guys, and if it's within 2 years for sure, and you want to get the score up fast, negotiate it out. If it's a collection account, you can remove it. You can do things to legally work yourself through it. However, definitely, please make sure that it's within 2 years and concentrate on those first. Let me stop here for a quick second. I am not a lawyer. I am not a CPA, and this is not legal advice. This is for entertainment purposes. And please make sure you check with either one of those when it comes to these specific rules. Okay, now let's talk about the third category. The third category is incredibly important and it's something that many people don't know. If you're buying a house out there, or let's say if you're getting a vehicle. If you're buying a house, there's something called mortgage scores. If you're buying a vehicle, there's something called auto loan scores. Now, for a house, it's incredible. I always find this incredible. You can get on as an authorized user on someone else's credit card, preferably someone who you know, guys, friend, family member, and you want that card, preferably if you can, to be over 10 years, 15 years, 20 years. You want it to be a long history. I love over 15 years, because those are really good cards with a high limit. If you can get $15,000, $20,000, over 10 will do the trick also. Sometimes less will also, but if you can get over 10, stick to it. And then you want to hop on that card. You want to legally have the person add you to that card. And of course, that card cannot have any late payments. So you want to make sure that there's no late payments. Believe it or not, they actually allow this stuff. Yeah, mortgage companies actually allow this. And your score, specifically that mortgage score, will jump like a rocket, depending on the history that you're adding and depending on how old your credit profile is. However, if you have a brand new credit profile, if you're new, let's say you're 2 years or younger in terms of the age of your credit, you're going to see this skyrocket depending on how you manage your credit. So a lot of different factors. However, you can see a nice boost. And if you can add at least 2 of these accounts, I promise you, if you look at these 3 categories and you do what I'm telling you to do in this video, you're going to see an increase of 100 points or more. So just as a recap, the first thing that you want to do is look at the utilization, go over this video again, make sure that you are under the 7% mark. That alone will get you some incredible amounts of points. Number 2, you want to concentrate on derogatory information. Less than 2 years is better. It's going to have a higher impact on the credit score. You want to work on those derogatories. Less than 2 years, up to 2 years, those come first when you are taking care of things on the negative side on your credit. And the third is you want to become an authorized user on a friend's card, someone who you know very close. If they have one for a very long time, 10, 15, 20 years with a very nice little limit, 10, 15, 20,000 works incredibly well. And then you want to wait. Now, it's going to take less than 30 days for this stuff to typically sometimes update. Sure, it can go over a bit. However, within 45 days, we have seen this information to be updated tremendously, and you come out with a brand new score. Now, let me close with this. Just because someone added you to their credit card, it doesn't mean that just because your credit score is extremely high, you're all of a sudden going to be getting all this credit everywhere. No, mortgage companies certainly will give you the benefit for that. However, when you're going to go apply for credit cards and other things, it works a little different. And I'll be adding some more information on this channel as to when these things work great, authorized users, and when they're just like anything else because they're not going to help you much. But for mortgages, definitely, car loans, definitely. And then, of course, make sure you sign up. Please hit that like button if this was of value to you, and I'll see you in the next video and in the next ones in the future also to come. Please share this page, it's going to help me grow. Take care. God bless you guys. Ciao.